Hello folks, this is Howard Reitzel from Reitzel & Company with our December 2014 financial update. We've expanded our office space at our new location in Bloomington, Indiana. We are located at the Johnson Creamy building on 7th Street, 400 West 7th Street, Suite 101. Stop by and let's talk. In this month's video, we'll discuss some of the economic events that occurred last month to give you some insight into what they mean for you as an investor. Please stay tuned at the end for the required disclosure statements. December was a fickle month for the markets that forced investors to weigh positive domestic fundamentals against fresh worries from abroad. Let's take a look at what happened last month. Falling oil prices caused a lot of market uncertainty as investors grappled with what low prices mean for the economy. Since recent highs in June, oil prices have fallen nearly 50%. While cheap oil and gasoline are great for American consumers who have more money in their wallets around the holidays, it's bad for oil producers. Countries like Russia and Saudi Arabia depend on oil revenues to balance their budgets. American producers need higher oil prices to make oil projects economically feasible. If prices stay too low for too long, it could destabilize many petroleum-based economies and shut down U.S. oil projects. Holiday shopping kicked off in November, and despite a rocky Black Friday weekend, retailers hope that the cheap price and an improving labor market will boost sales. Sales between November and December are projected to grow 4.1%, which is the biggest increase since 2011. On the other hand, many stores offered large discounts to lure shoppers, which may cut into their profit margins. The Commerce Department released estimated GDP numbers showing that the economy grew at a whopping 5% in the third quarter. That is the fastest rate of growth since 2003. Even better, the biggest revision was in personal consumption, which is the most important driver of overall economic growth. Now the question is, how much of that juice will be carried into the future quarters? It's too soon to say for sure, but we hope the cheaper gas and a better job situation boosted the economy in the fourth quarter. Overall, 2014 was a good year for the U.S. economy. As the economy moved into the fifth year, we finally regained all the jobs lost in the recession, and Americans started believing in the economy again. Looking ahead, it's important to be cautious about markets in the coming weeks. Despite periods of volatility, markets did well in 2014, and a pullback is possible. Fundamentals are solid, and we expect positive consumer sentiment and an improving labor market to contribute to gains in 2015. On the other hand, significant uncertainty remains about how weakening global demand. How will prices and interest rate hikes affect the U.S. economy? As always, we recommend focusing on your own investment strategies while allowing us to keep an eye on the market conditions. I hope you've enjoyed watching our economic updates this year. We look forward to a very prosperous 2015 together. That's it for the December financial update. If you have any questions or concerns, please give our office a call at the number below. Once again, this is Howard Reitzel with Reitzel & Company, signing off for the month of December. If you have any questions about what you've heard,
I lost my place.